So last class we have discussed about the short-term capital gain calculation, how to calculate short-term capital gains. Okay, with illustration, we have first understood why it is a short-term capital gain, and we have also understood how to calculate the short-term capital gain. Okay, why it is a short-term capital gain? Because from date of purchase to date of sales, year period of holding is only 20 months. Okay. 20 months only. Mr. X is keeping this property with himself only for 20 months. So for land and building, we have seen that it should be at 24 months. No, it should be more than 24 months. Then only it will become long term. Otherwise, it will become short term. Okay. Here is purchased the property on 1st April 2018 and sold the property on 30 November 2019. So he is holding only for 20 months. Okay, and a house will come under land and building category. Okay, so it should be held for 24 months, 1 day. Okay, if you want to understand it precisely, it should be 24 months and 1 day. If you are holding that property, after that you are selling that property, then it will become long term. Otherwise, it will become short term. If it is a short term, then calculation is very simple. Just to take the sale consideration. Okay, cost of acquisition, reduce cost of acquisition, cost of improvement and expenses. You will get the capital gain. So here capital gain is 18 lakh rupees, which we have understood in the previous class. So this much everybody understood how to calculate a short-term capital gain. So method is short-term capital gain is simple. Just to take the sale consideration and reduce the cost. All the cost you reduce, cost of acquisition, cost of improvement, expense in connection with the transfer, you will get the short-term capital. Okay, this much everybody clear about short-term capital gain. Now we will understand the long-term capital gain calculation. Method is same only one difference is that instead of cost, we will calculate indexed cost. So what is indexed cost? Indexed cost means increased cost. This benefit will available only for long-term capital gain. Okay. Last class also we have discussed that why this benefit is available, because normally long-term capital gains are of huge difference will be there in date of purchase and date of sale. For example, you have purchased the property in 1980 and sold the property in 2020. Okay, there is a difference, no huge difference is there. So this is a long-term capital gain. In 1980, cost was less comparative to 2020. Okay, so you cannot compare this 50,000 and 30 lakhs. And so the amount of gain will be 29 lakh 50,000. Okay, 30 lakh is the consideration minus 50,000. 29 lakh 50,000 will be the capital gain, which is a very big amount. On this, if we will calculate 20%, tax will come to 5 lakh 90,000 plus 4%. So total tax you will be required to pay is 6 lakh 13,600. Okay, which is a very big amount. No? So for this purpose, Income Tax Act gives benefit in long-term capital gain. Income Tax Act says that you can increase this 50,000. Okay, since the years are very vast differences there between the years, you can increase this cost by applying a factor which is known as cost inflation index. Okay, so this factor, it is called as cost inflation index. We will apply this cost inflation index and increase this cost. This benefit will be available only in case of long-term capital gain. Okay. For short-term capital gain, indexation benefit is not available. Note everybody, indexation benefit is available only for long-term capital gain. For short-term capital gain, indexation benefit is not available. Okay. So indexation benefit will be available only for long-term capital gain. Indexation benefit is not available, applicable for short-term capital gains. Okay, and how we will increase the cost? We will increase the cost by using cost inflation index. Okay. So what is cost inflation index? That we will understand by doing the illustration. So now we will take one illustration of long-term capital gain computation. Okay. Let us understand this illustration on long-term capital gain. Mrs. Prerana sells the land during the previous year 1920. Okay, so Prerana was having a land which she sold during the previous year 1920. Sale consideration was 8,50,000. So she sold the land for rupees 8,50,000. This capital asset, that this land was acquired in 2002-3 for 2,70,000. Okay, so she purchased the land for 2,70,000 in which year? 2-3. Brokerage paid is 3,289. What we have to calculate? We have to calculate the capital gain for assessment year 2020-21. Okay, understood this question? Simple question. Prerana sold the land in 1920 for 8,70,000, purchased in 2003 2-3 for 2,70,000. Other expenses is 3,289. Capital gain we have to calculate. Here in note C, one detail is given. Cost inflation index for year 2002-3 and 1920. In 2002-3, cost inflation index is 105, and in 1920 it is 289. What is the meaning of this? Let us understand. Before starting this question, everybody tell whether this gain will be a long term or short term. This land is sold by Prerana in 1920. Okay. And she has purchased this land in 2002-3. Whether this gain will be long term or short term for Mrs. Prerana. Everybody can tell, you can put your answer in the message box. Whether this gain will be a long-term capital gain or short-term capital gain. Okay. Simple logic you have to apply. Purchased in 2002-3, sold in 1920. So whether it will be a long-term or short-term. First, we will have to always decide whether the capital gain is a short-term or long-term and accordingly apply the method. Okay, only one answer. Whether this capital gain will be a long-term or short-term. Okay. This will be a long-term capital gain, very correct answer. Why it is a long-term? Because date of purchase is 2002-3. Okay, and date of sale is 2019-20. Okay, and so period of holding will be how much? 17 years, no, approximately. Okay, and we know that land and building will become long-term capital gain if it is held for more than 24 months, which is approximately around 2 years, you can say. 24 months means 2 years. For purpose of understanding, you can understand 24 months means 2 years. And here, in this case, Mrs. Prerna has purchased in 2002-3 and sold in 1920, which is around 17 years. Okay, and for land and building to become long term, it should be held for 24 months, that is 2 years, 1 day. So here it is a 17 year, which is much more than the needed condition. So obviously this will be a long term capital gain. Clear this much, everybody. Why it is a long term? Because period of holding is around 17 years, which is more than 2 years minimum required condition. 2 years, 1 day is the minimum required condition. Okay, but here it is 17 years, so we can safely assume, say that it is a long-term capital gain. Understood, everybody? So if it is a long-term capital gain, we cannot directly reduce the cost. We will have to increase the cost. That we will understand how to increase the cost. So basic details we have already noted. See, name of the SSC Mrs. Prerna. Previous year 1920, assessment year 2021, year of purchase is 2002-3, year of sale is 1920. Nature of capital gain is long term. Why it is a long term? Because period of holding is more than 24 months, which is a 17 years, you can say. So nature of capital gain will be long term. Now how to calculate the capital gain? Let us understand. Particulars amount rupees. First, we will take the sale consideration. Always we will start with sale consideration. Okay. What is the sale consideration? For how much rupees am I selling the land? For 8,50,000 rupees. How much rupees she will get by selling the land? 8,50,000. That will be the sale consideration. Rupees 8,50,000. Okay, this is the sale consideration. Next, we will have to reduce the cost of acquisition, but it is a long-term capital gain. So we will have to calculate the indexed cost. Indexed cost of acquisition. We will calculate index cost. Let us understand. See here, two numbers are given. See, in 2002-3, cost inflation index was 105, and in 1920 it is 289. So this will always be given in the question. No need of by-hearting these amounts. Okay, in question, these figures will always be given. Okay. Now, if more than data is given for confusing purpose, you will always have to see which is the year of purchase. That year's data will be relevant, 2, 3, and year of sale. That year's data will be relevant. Okay, in this question only correctly 2 years data is given. Sometimes more data may be given for just the confusion purpose. In that time, you will have to take care that which year is relevant for our calculation. It will be year of purchase and year of sale data will be relevant. Now, what is the meaning of this? Let us understand. In 2002-3, if you could purchase an item for 105 rupees, today in 1920, same item is costing 289 rupees. This is the meaning of cost inflation index for purpose of understanding if you could purchase an item for 105 rupees in 2002-3, same item in 1920, you will have to pay 289. Okay, so 2002-3 cost inflation was 105. So suppose if you had 105 rupees, you could have purchased a particular item. So for purchasing same item in 1920, how much rupees you will have to pay? 289. Now see, now in 2002-3, you have purchased this property for 270. Okay, so what will be its corresponding cost in 1920? That we will have to calculate, because we are comparing 1920 and 2002-3. 17-year gap is there. So we will have to increase this cost in 2019-20 terms. How we will calculate? Simple, just cross multiply and calculate this amount. So everybody please do the cross multiplication. How we will do? 270 into 289 divided by 105. Okay, cross multiplication everybody know how to do. So you will get this value. Everybody tell how much it is. 270 into 289 divided by 105. This you can take it as X. Which is the corresponding cost in 1920? 7,43,143. Okay. So corresponding cost is in 1920 7,43,143. So this cost you will take for reducing purpose. Understood? This is the concept of cost inflation index. Okay. By using these factors, we will increase the cost. Okay, so how we have calculated it? Two thousand two, 2019, 20. 2002, 305 was the index, and in 2019-20 it has become how much? 289. So similarly we can compare. 270 would have become how much? By doing the cross multiplication. Cross multiplication you can do. You will get this amount, which is we have calculated now. It is rupees 7,43,143 rupees. So instead of 2,70,000, we are taking 7,43,000, because year is more different, so it is not proper to compare 8,50,000 and 2,70,000. So in that case, gain would be very high. Okay, that's why we are substituting the cost with the indexed cost. Okay. Yes, say 142.86 means we can round off. No? 143 we can do. So 7,43,, 142.86 means we can round it off to 7,43,, 143. Correct. No? Then one more cost is there, which is brokerage cost, that we will reduce directly. For that, indexation will not be applied. Brokerage cost. Brokerage cost is how much? Rupees 3,289. So now we will get the long-term capital here. So do the reduction, you will get the calculation, you will get the long-term capital gain, how much it is. Everybody calculate this, you will get the long-term capital gains. Okay, understood. See, item which you could purchase in 2002-3 for 105, it is costing 289. So obviously this 2,70,000 would have increased. No, it has increased to 7,43,000 approx. So we will compare this indexed cost with the consideration, and we'll get the capital gain, long-term capital gain. So long-term capital gain is 1,03,568. Okay, good. 1,03,568. Understood. This we will pay 20% tax plus 4%. Okay. Otherwise, if you would have taken here 2,70,000, your gain would have become very high, which is not correct, because there is a difference of 17 years from date of purchase and date of sale. So we will bring the cost to current year term. Okay. So this benefit is available only for long term, not for short term. Clear? Understood this much, everybody? Any confusion? Okay, yeah, good.